Okay, everybody, welcome back to episode 33 of the More Doors podcast. We have Zach Gray from Freedom Management up in Boston, Massachusetts, joining us today, and we're going to talk to him right after this. Welcome back. It's a wonderful Thursday here in late February. Welcome to the More Doors podcast, episode 33. I'm here with my very handsome and very intelligent co-host, Brian Force.
Oh, I thought you were going to say Nicky's not in here yet.
He's about to be. He's not here yet. And I don't know if those qualifications fit him.
That's fair. I appreciate that.
You're welcome.
I'm excited for today.
I am too.
We got a great interview coming up. We also got, I love doing podcasts on days where we have real active stuff in like our business going on. We got boots on the ground day today. I'm wearing actual physical boots.
Due diligence day.
Due diligence day on one of our new acquisitions.
That's right. Very, very exciting. Yeah. We have that. We had two very amazing capital raise networking conversations yesterday, including dinner at a delicious restaurant with our wives and significant others, which is always good.
Yes.
But before we jump into the show and hear how Nick built himself up a sizable portfolio from 1 to almost 200 units in just a couple of years, let's give some kudos to our show sponsors. First and foremost, Deep Blue Capital. Check us out, deepbluere.com. We have, as Brian mentioned, we have a deal that we're in due diligence on as we speak. More details on that to come very, very soon. We also have a number of other LOIs out there, and we're starting to see some really good opportunities cross our plate. So go to the website, deepbluere.com, subscribe, hit us up on socials, grab a Calendly link for one of us if you can find it. Get time with us. Let's talk about your goals. Let's talk about how we can help. Let's also give a shout out to the one and only hashtag best beard ever, Jesse Showalter at Tor Studios. Check Jesse out at torstudios.com, T-O-R-E studios.com. He's going to hook you up with an amazing podcast with fancy uplighting and amazing microphones, and he's going to make you look amazing out there in the cyber podcast world.
The cyber
podcast world.
I like it.
You like it? You might even throw some Gen AI in because you can't go 30 seconds anymore without mentioning Gen AI. So Jesse's going to hook you up with some Gen AI somewhere in the podcast production world, right? Right, Jesse?
Absolutely.
Nice. Superfluous. There's another good one.
That was
right?
a really good one.
Yeah, superfluous Gen AI around here. All right, Brian, who are we talking to today?
I'm excited today. Let's bring on Zach Gray. Zach's got an amazing story. He's built a hell of a portfolio. We've had a lot of fun talking to him on our previous calls, but I never like to give people their like I let people tell their own story. So welcome, brother. Appreciate you taking the time, man. Thanks for joining us.
Hell yeah. Thank you so much for having me on, guys. I'm really happy to be here and share, the story that has allowed for me to, scale my portfolio so rapidly in, the last few years in a really challenging market. And hopefully I can provide shed some light on some value for, existing investors and listeners that they can implement in their own lives to help scale their own portfolios.
100%, man. We appreciate it. And I think that's what's so great about the investment world in general is it's collaborative rather than competitive in most ways. So give us your without further ado, kind of give us the background, your story, where you came from, where you're at now, what your goals are for the future. Kind of give us some insight.
Yeah, so I'll kind of give you like the Spark Notes version or like the real skinny on like how I got started and just sort of my ascent in the real estate space. So I basically run my own gym. I started that in sort of ironically in probably the worst time possible that you could imagine, which was 2020. I separated from the luxury gym that I was working at, started my own business, training house to house to house. During that time frame, I was just rapidly blowing through Bigger Pockets podcast. I probably listened to 250 Bigger Pockets podcast, On the Market podcast, anything I could get my hands on that was real estate related. And during that time, I was able to scale my clientele load and I was able to develop a pretty significant income stream. And I also, during that time, one of my main focuses in order to mitigate risk for myself in a really sort of unforeseen circumstance, which was COVID-19, was I sold my townhouse and then rolled it into a duplex to be able to live rent-free or mortgage-free as an effort to scale my business. And very quickly, what I determined is, obviously, because I was living rent-free, mortgage-free, I was able to preserve more of the capital that I was earning. In addition to, obviously, I wasn't spending a whole heck of a lot of money during COVID, as a lot of us weren't. And I was learning very, very, much so about real estate in a big way during that period of time. Also, during that time, I probably read a total of 20 to 25 books per year for the last 3 years. And to me, it's not a secret that I've achieved the success that I have during the time in which I focused the most on self-improvement. Whether that be real estate related or whether that be interpersonal, psychological, or business skills. Yep. And so this kind of brings me to my next point, which is I bought my first house hack. I lived in there for about 9 months to a year. So then what I did is kind of an interesting strategy. And this is kind of the strategy that I pitch to all people who are interested in getting started the first time around, is I bought that house hack. I bought a property that was value add based. I was able to go to the bank. I pulled out a home equity line of credit. I found a bank up here in Massachusetts that would lend up to 95% on an owner occupied property for a home equity line of credit. So I was able to pull out close to $100,000 on the property that I acquired and the one that I added value to. The biggest key here is to not use the home equity line of credit right away. And I'll explain why. So during that time, I bought my first property with a conventional loan, owner occ. And then right after that, after 9 months, I then went and used my FHA loan and maxed out my DTI and bought another owner occupied property. And so what I did is, as soon as I maxed out my DTI, but the big key here is I had already acquired my home equity line of credit that I had access to. So I was able to access that money, even though my DTI was already maxed out. I didn't have to go apply for it at that point. So I was able to use that home equity line of credit to partner with somebody that I met at a local meetup to buy a 5-unit. And for those of you who are unfamiliar with the differences between residential lending and commercial lending, this was super impactful because commercial lending doesn't take into consideration personal income, personal debt to income ratio. So you go through a whole separate different set of underwriting that's associated with the performance of the property rather than your own personal finances. And so this was super pivotal for me to go and seek out commercial lending for this project, in which I partnered with this partner of mine that I met at a local meetup. And, kind of fast forwarding through that journey, we were able to execute on that project. We were able to pull out all of our money from that project after a year of operation from improving the performance of the property. And I took the performance of those first 3 deals, my first 2 house hacks, as well as my partnered commercial deal. And I basically underwrote the financials of those deals. And then I used those to market my skills to my immediate network. And in marketing those performances to my immediate network, one of the things that was a real kind of dangle of the carrot to my immediate network is this was a time in which there was a rapid interest rate hike environment in which you're seeing, escalation of rates every couple of months. The stock market was in the toilet, and there was no real safe space to generate secure returns. And so I think that during that time, what I did is I went to my clients and I said, hey, I will personally guarantee my preferred return on this deal. And I was able to do that because I didn't have living expenses that I was personally accountable for. Right. So by mitigating my living expenses by living in a house hack, I personally guaranteed the return on the first deal for the operation, for running the operation. And so what I was able to do is I was able to lure in a couple people to do my first couple of deals with me. I executed to a T, and those deals are running like a top. And by executing on those deals, I then started to put together marketing material for those deals on the performance that I had executed. So at that point, I was putting in about 10 to 20% of the funds for those deals, and my investors were funding 80% of the capital needed to do those deals. Now,
so Zach, let me jump in here for a second. So, because I think there's so much goodness here that we probably need to unpack, right?
Yeah.
So you start out with a house hack, you add value to it. Like, walk us through super cliff notes of that opportunity. So, what did you do to it, and what was kind of the before and after numbers?
Yeah, so I bought that property for $510,000.
How did you finance it?
I financed it with a conventional loan, 20% down. I rolled the sale of my townhouse into the down payment, and then I came up with the remainder of the capital, which was not a significant amount of capital. It was like maybe $30,000 or $40,000.
Okay. So then, what'd you do to it?
I painted the upstairs. I painted the upstairs. I ripped out some carpet, added in some laminate flooring. There wasn't a crazy amount of actual renovation scope on the upstairs unit that I was renting out. That was the better of the two units.
That's good.
The downstairs unit definitely required a little bit more love. But ultimately, the biggest key here was that the upstairs was marketed as a 3-bedroom, and the downstairs was marketed as a 2-bedroom. Well, it turns out that we were able to use the downstairs as a 3-bedroom, and during the ownership period, I was able to create a 4th bedroom. Then on the upstairs, it was deemed a 3-bedroom. However, there was additional rooms on the 3rd floor that were not deemed as adequate bedrooms. However, they were livable space. So I was actually able to take a property that was deemed a 5-bedroom, 2-bath and convert it into what was an 8-bedroom, 2-bath.
Wow.
And now, for that, with that being said, at the time of purchase, I bought in a market that I was very, very familiar with. I grew up in this market. I knew this market very well. And I knew that this market was a high rent appreciating market. I bought the property at $510,000. I rented the 4-bedroom upstairs for $2,800. And then upon moving out of the property a year later, I was able to garner $3,200 for the top floor, which was originally $2,800, and the downstairs I was able to rent for $3,500. So I was getting $6,700 on this property, and I bought it for $510,000, and my total scope of work for both unit renovations was roughly about $40K. So I was in the property for $550,000. I'm grossing at this point. That property is now grossing $7,100. I'm in it for $550,000, and my monthly payment on that property is roughly about $2,400.
Wow, nice.
That's awesome.
Do one of those a year.
Yeah, right.
Yeah.
And you still own that one today?
I still own that one today.
Love that.
Yeah.
Okay, so you do the house hack, you do the rehab, you find any extra bedrooms. I mean, that's kind of, it sounds like you've definitely paid attention to some of those 250 Bigger Pockets episodes that you listen to in your come up. So that's awesome. You do the HELOC, you pull out a bunch of cash from the HELOC, and ultimately find your way into a 5-unit, right? So, like, aside from the DTI restriction that you had, what was appealing to you about making the jump from single family into commercial and multifamily?
So I guess what I want to make sure that I understand is in regards to, so my first 2 properties were multifamily properties.
Yeah, you're right.
If you're talking about going from 2 multifamily properties into sort of the commercial realm, is that what you're discussing?
Yes.
So I think that what was the most appealing for me is actually just the deal that we found. I think it was coincidental that was the case, but I also think that we were realizing we were going to have a lot of trouble, me and my partner, given the fact that we were like line of credit on this, house hack on that. Like, we were both in the same position where it was like banks looked at us and they're like, yeah, next window, buddy.
Yeah, trying to piece it all together on every single deal. It's like you got to find a way to start to scale.
Yeah. And so I think that that deal, that 5 unit that I was referencing, we found that directly on the MLS. He called me up on a Friday night. I was walking my dog. It was like 5:30. It was like, you know, in the spring, summertime, so there was still pretty light outside. I was walking the dog in the woods, hanging out with my wife. And he calls me up and he's like, hey man, this property just came on the MLS. This is the price. This is the condition. He's like, this is how much money we need. And he's like talking a mile a minute, like trying to like salesman, you know, pitch me on it. And I was like, slow down for a second. I was like, 5 units. How many bedrooms per unit? Tells me the bedroom count, tells me the unit scope, tells me the price. And I was like, I'm in, man. Let me know when we're going to walk it. And he's like, just like that. He's like, just that cold. He's like, you're in it. And I was like, yeah, man. I was like, I'm not, you know, I was like, the best time to buy real estate was yesterday. The next best time is today. And the worst time is tomorrow. I was like, let's get some shit done, man.
I love that. Love that.
Oh man, that's good.
So what happened with that property?
So that property, that was not, I talk about it like it was, you know, we bought it at 650. We got a interest only period for the first 12 months. Nice. We got a $50K construction loan. We used the $50K to stabilize the property. It was not smooth sailing from inception. I will tell you that much. Mm-hmm. What I will say was our saving grace is that 3 of the 5 units were Section 8, and we were able to bump those up immediately to market, which was huge.
Yeah.
Why did you refer to those as a saving grace?
Because we did not have to go in. So this property was grossing $4,700 when we bought it. Mm-hmm. And a year later, when we stabilized it, the property was grossing roughly about $8,900.
Wow. So because you had the Section 8, you know, that guaranteed money coming in, basically you're able to raise it market and not have to go find new tenants.
Well, I think the other thing is this is in a C-class market. You're going to go to these tenants and you're going to say, hey, it's nice that you're paying pennies on the dollar, but we need you to pay full freight. Mm-hmm. So rather than having to bump them up incrementally, we were able to go to Section 8 on day one, contact the reps, and get the units up to full freight on day one.
Exactly.
So that was huge. Then we only had 2 units to deal with. One of the most challenging things was there was a woman with a 1-bedroom voucher in a 3-bedroom unit for Section 8 that we had to get out of there. It resulted in a police call and her chasing my partner with a frying pan. So, you know, that just tells you how that process went.
Wow.
So it was not all sunshines and rainbows on that one, but ultimately we navigated it. We were able to get it up to a point which was grossing close to like $8,900. And we were recently able to refinance that property for $905. So in a year we made $200K on the property and we were able to get all of our initial capital out.
Wow.
That's fantastic.
Congratulations, man.
Nice.
That's awesome.
Do one of those every couple of years too.
Yeah, right.
Yeah.
Well, yearly.
Or yearly, yeah.
Let's make that yearly.
Yeah.
I mean, you found, and you said that was an MLS deal, right?
MLS.
I mean, that's crazy that we don't see those here in Dallas as often.
Well, the 8plex, Mike and I bought back in the day. That was MLS.
We don't see him here. We don't see him here either. We went and that property came on a Friday. We got a showing set up on a Tuesday. They were supposed to have more showings on Tuesday after us. They had 8 showings lined up, and then they had an open house on Saturday. And we showed up at the property. We were the first group to walk it. We requested to be the first group to walk it. We literally submitted an offer at ask, no contingencies, and we literally wrote the offer and docu-signed it on the curb and sent it to the listing agent and said, call your client.
I think that's huge, man. And one of the things that I've learned about you just in our few conversations that we've had so far is that I think I really want to give people actionable advice is it seems like you guys know your market well, you know your numbers well, and you pull the trigger well. And I think one of the things that holds investors back is that they're so scared to do deals because they don't trust themselves and they don't trust their numbers. Or maybe they did a few deals and they really weren't that good at the numbers, so they got burned and now they don't trust themselves. Like, what do you guys, what gives you that confidence to pull the trigger so quickly when you know a deal is a deal? Because when you can do that, you can do anything in this business.
I think the most impactful thing is you have to get really, really comfortable with underwriting. And I think to that point, I had spent, so in the early stages of me getting involved, one of the biggest detriments to me getting started, and I think I'd be further along had this not been the case, but in the early 2020, I recognized the environment that we were in which the Fed was relentlessly printing money. We had rates at all-time lows at 3%. We're going to see rapid asset appreciation across the board. And I said, I need to acquire as many properties, as many assets as possible during this time, or you're going to get left behind. Yeah. And I think that to that point, one of the biggest detriments was that at the same time, I had taken the leap to go self-employed, which resulted in I didn't know anything about hard money lenders. I didn't know anything about, how to acquire properties with unconventional lending terms at that point in time. So I'm trying to go to banks, and banks are laughing me off, off the street because they're not willing to take any risk during that time frame. Right. And I think that, one of the things that I would say is I spent all that time accumulating knowledge, listening to podcasts, underwriting deals weekly. I was underwriting 10, 15, 20 deals a week. Yeah. And I couldn't even take action. So at that point, you have done it so many times over that, like I could scroll rapid fire. I could take a 45-mile radius, pull up a Redfin or Zillow list, and I could scroll, rapid fire and be like, no, yes, that has opportunity, like it. No, yes. And I could pull them out, out of a hat so easy because I got so comfortable with what you could list what is a 2-bed rent for in a 45-mile radius of where I lived, and I could tell you on the spot. And you have to be able to do that if you want to be able to take swift action.
Yep. Love that. And I mean, that's what's great about living in, the modern environment, right? Is those things used to not be that simple. Information was limited. You had to go straight to the brokers, things like that. Whether it's, Bill Ham we had on the podcast recently, if you look at his Creative Cash book, same type of thing, right? Joe Fairless talks about this a lot. Before you ever do your first deal, you should have already underwritten hundreds, and nowadays when you have the ability to have so much information at your fingertips online and just through conversations with brokers who have their phone numbers right there on your screen, you can call, it feels frivolous sometimes. Like I'm doing all this work, but I don't even have a deal yet. It's like, well, you're never going to get a deal unless you know how to recognize it. So do the work, learn how to underwrite, learn how to look at a deal and go yes or no right away, or that gets to the second layer right away. Yeah. If you can't say no to a deal really quickly, it's going to be hard to say yes to a deal really quickly.
Yeah, well, I agree.
I think there's a point that I want to hit on that you just is so impactful, and is if you have the mindset of I'm going to be adequately compensated for doing work in life, you will never be wealthy. That's what it comes down to. What it comes down to is you need to be able to work tirelessly, relentlessly, and without waver, regardless of the outcome, and you will be wealthy. That's how the world works.
I think that's just such a good point. It's one of the things that keeps people from making the transition oftentimes from a W-2 stable income to really building the real wealth that they want to build in this world. Is there's a period of time where you're putting in a lot of work, but you don't get that paycheck every 2 weeks. And to conceptualize that is hard for a lot of people.
Yeah. Yeah. As I sit here, I really think about all the fantastic levers that Zach pulled very early in his career that by all means probably helped him scale. And I definitely want to talk about kind of the how you scaled so quickly. But, we talked about moving equity, return on equity from his townhouse, right, into something that could generate more value, right, and kind of a jump from single family into smaller multifamily. Yep. We talked about house hacking, right? So how do you get a mortgage, put somebody in, help offset the mortgage, and then ultimately do it again a year later, right? Recognize opportunity, leverage creative thinking on how to drive more value. Yep. Like I'm sure there was lots of people that drove by that initial 5-bedroom duplex and didn't realize you could turn it into 8 bedrooms. Yeah. Right. I think Brandon Turner talks about this a lot, where those 2-bedroom 1,000+ square feet single family properties, right? How do you turn those into a 3-bed and drive your ARV up, right? So Zach's doing that very early in his career. He's leveraging his own money. He's leveraging HELOCs.
Yep.
And then he starts recognizing that you can go out there and raise capital. Yep. This is all within, the formative stages in his multifamily career,
Yep.
right? So it's just super impressive.
And think of it this way, is that, those steps that you took, Zach, a lot of people they probably listen to more Bigger Pockets podcasts. They probably listen to 500. They're on the forums. They're posting. They can spit numbers out like they do it. And then you ask them, well, how many deals have you invested in? Like, none. I just haven't found the right one yet. Or what you did. And let's go back to you were selling your townhouse and house hacking. You mentioned you were married, house hacking, trying to get, number one, just yourself to agree to do that, and then get a partner to agree to that is a great sales feat in itself. Right? So it's taking the action, but in getting your partners on board to buy into the vision. So go back to that. You sold your primary house, your townhouse, used those proceeds that were tax-free to then go into house hacking. What did your partner think of that?
So I'd be lying to you if I told you that there was not a tiny bit of fear mongering involved. But let me explain the situation. You're in a situation in which you have a national, health epidemic that is really unforeseen in your entire lifetime. Mm-hmm. And you don't know what that's going to look like in regards to employment. You don't know what that's going to look like in regards to your own financial situation. And I said, what's the biggest risk to us, being SOL here, is a mortgage. And I said, if we can mitigate that mortgage, we have no risk. And I said, we can weather any storm.
Yep.
So to that point,
yep.
Right? That was my first selling point. But then I said, hear me out for a second. I said, tell me what it is that you want in this life. What is it that you are, that you are after? Mm-hmm. And she tells me all the things that she wants. She says, I want this kind of house. I want this many bedrooms. I want this many kids. I want to be able to raise my kids. I want to not have to worry about money. And she said, these are getting a little bit more particular, but she's like, I want a barn. I want a donkey. I want, and she's listing off all these things. And I'm like, she's like, I want to go on vacation a couple times a year. It doesn't need to be lavish, but like, these are the things that I want. Mm-hmm. And she said, I want you to be around too.
Yeah.
And I said, okay. And I said, all right, here's the play. I said, I had acquired enough knowledge that I realized that we could house hack and we could rinse, repeat that cycle every 6 months to 9 months. Mm-hmm. And I said, if we use this strategy for if you give me 5 years, at the time I was, 27. I said, give me till I'm 32. At 32, she would be 30, 31, and we would want to start having kids. And I said, give me 5 years, give me a 5-year runway, and let's full send it, and trust me implicitly on the situation.
Yeah. And
I said, you will have all the things that you want. And she was like, I'm in, I'm down.
That's the main point of it, even the getting very granular to the donkeys, but to the point of you being around. Because how many times do we see, and this usually happens with husbands, where they're doing this for their family, they're working their W-2 income job, and then they're going to go and build another business, investing, whatever, and they're gone all the time. Yeah. And then, we had dinner last night with Aaron Katz, go back to episode 30, right? Episode 30, from mattresses to multifamily millions. And that's one thing that Aaron talked about is having the freedom and the time. Like, he could have scaled his business to doing more deals.
Yep.
But he chose the lifestyle, the freedom of that lifestyle. And just like your wife, Zach, said the same thing, is like, I want you around, and you found a way to get it done. So you went to house hacking, and then you went to the 5-unit. Where did you go from the 5-unit? You said you cashed out on that one. You pulled $200,000 out. You got you and your partner's initial investment back. What did you parlay that money into?
So what I will say is that process took, over a year. It probably took about 12 to 14 months from execution.
Yeah.
And I'm happy to talk about kind of what we ended up doing with that money. But I think that you're kind of hitting on what were the next steps.
Yeah.
And so during that time frame, what we did is I had mentioned this was a time in which the stock market was crumbling, interest rates were rising rapidly, and we had run out of money to use of our own.
Yeah.
So in order to scale, we needed to bring in investors. And so what I did is I reached out to my immediate network of, I run my own business at this point in a very high income earning region outside of Boston, in some of the most affluent suburb markets of Boston. And I was reaching out to people in my network that had long-standing relationships with me and saying, if you put money into these deals, I will pay you a 10% preferred return. I will personally guarantee the return, and I will give you 50% equity upside on the deal in addition to that.
Okay.
And then I mapped out the deal, mapped out the performance, showed them what the outcomes would be, and then showed them how we'd be able to get all of their money out at the end of the first year.
Wow.
And they were like, I can't even earn 6% in the stock market right now.
Yeah.
So they're like, you're going to pay me 10 personally guarantee it. I get a hard asset to collateralize the situation, and we got equity upside. They're like, I'm down.
So one, that's an incredible strategy, obviously, if you can execute on it. And so the natural question for investors goes, what type of deals were we looking at? These are similar, these are multifamily, still under 20 units, things like that. And then how are you able in that time to find the types of deals that you're able to pay a 10% pref on? That takes a pretty solid system of lead generation.
Yeah. So what I would say is, in order to become really prominent in this real estate space, the biggest thing that you need to hone in on early on is you need to find out what is the market you want to operate in, what is the asset type that you want to own, and you need to be unwavering and relentless in that space.
Yep.
If you try to spread your attention into too many directions, you'll inherently be good at nothing.
Yep.
So we stuck in multifamily the entire time. Additionally, I come from a background where my parents filed for bankruptcy when I was 17 years old, and I see what it's like to have bad debt on the books.
Yeah.
And to me, multifamily is the ultimate hedge of risk. So I chose multifamily from inception for that purpose.
Sure.
And I continue to operate in the multifamily space for that reason. What I will tell you is, again, the next set of deals that I acquired, there's really 3 deals that happened in a sort of a very short period of time. One of them was almost a carbon copy of my first house hack.
Okay.
I found a 5-bedroom, 2-bath with the ability to convert into an 8-bed, 2-bath. I bought it for $540. I put $40K into it. I was in it for $580, and I was able to rent the 2 units for a combined $7,000.
Wow. It's almost the exact same deal.
Almost the exact same deal.
Wow.
And I found that right in the MLS.
Yeah. So that's interesting. That's the second one that you found. Do you feel like, because we're in a very similar market, like you said before, that doesn't happen often on the MLS. Do you feel like that trend is starting to increase a little bit, where people are not looking? No. So you just got to be, you're just on top of it. When those come along, you've got to be a shark. You got to be on top of it.
I am looking at the MLS at 4 a.m. every single day.
Yeah, exactly. Exactly. No, for real.
I'm looking at the MLS at 4 a.m. every single day. I'm looking at what came up. Am I interested in it? Is there anything I'm interested in a 45-mile radius from where I'm at? And then if I find something I'm interested in, I'm on the phone at 8 a.m. calling the broker, being like, I need to get in the property, and here's my pre-approval, and here's proof of funds, and we're rolling. Like
100%.
I'm not playing again. It's relentless action taking is what is going to yield you the outcomes you are looking to achieve.
Agreed.
So that is another example. What I will also say is I specifically target times of year in which there are major events going on that prohibit other people from viewing. And what I will say about that is I'll kind of delve a little deeper into that. Let's say we have a snowstorm. Let's say we have a torrential downpours or let's say that we have a major holiday. Those are the times where I'm going and I'm going looking at 6 open houses and I'm submitting 6 offers, 10 to 15% below list.
Yeah.
Right? Because other people are off, frolicking in the fields, right? Day drinking with their friends.
Exactly.
Doing shenanigans. And it's like, let's like make some moves here, guys. Like this is an opportunity. So it's like, I think you need to take advantage of opportunities when everyone else is asleep at the wheel to try to maximize your own situation. So that's one example that I would give. The next 2 deals, one was an off-market deal that I actually sourced through a local Facebook community group. And what I will say is Facebook community groups, not real estate related community groups, all the towns that you are interested in buying in, if you are not a part of your local Facebook community groups and you have a regular posting cadence in those community groups to try to generate leads, you're wrong.
Yeah, that's a good tip. I'm actually taking a note of that right now. It's so easy to get into the investment groups, but that's where all the other investors are. Get into the community groups.
I have scored 4 deals, all of which I have made 100K on in local Facebook community groups.
And do you run those groups, or are there just other groups that are ran? Okay.
Yeah. Nope. It's just people that are looking to unload something, but they're not an investor, and so they're probably not going to the Facebook investment groups. They're just going to the most natural place for them, and that's just the local community group. That makes a lot of sense.
You got it.
Yeah. And never really thought about that.
No, I like it. So you were doing those deals. You started going to your network and raising some money, and giving a pref return. What were some of the other? Did you get into any largers? I think I saw in a Facebook community group that was there a 125 unit property you acquired? Was that you?
No, that was not me.
Okay, same. It has the same name, so
that's all right. We did start to get into some bigger stuff. Right at the time in which we had acquired those 3 deals, we had some people in our network that are relatively skilled and had a system surrounding off-market lead gen, and they were moving at a similar pace to us, but a little slower, simply because of the funding.
Yeah,
and they came to us and they said, "We got a 69 unit portfolio composed of 12 buildings from an estate
okay,
that wants to sell, and it's in like a C-D area."
Okay.
And my partner calls me up and I was like, fuck no. And we went and walked, and he was like, come on, dude, let's go walk it. Let's go. I'm like, dude, 69 units, man, 12 buildings. That thing's going to take 8 hours. I'm like, we're going to be there all day. And he's like, come on, man, walk the deal. And I'm like, all right, fine, I'll go walk the deal. So I drive down there. It's an hour and 20 to an hour and 30 minutes away.
Wow.
We get there, and we start walking the deal. And I'm like, these buildings are nice, man. I'm like, these buildings are relatively well maintained. Most of the units, I would say 75% of the units, if I was to rate them on an A to F scale, were like Bs.
Wow.
And I was like,
okay.
And all right, so half the units had newer heating systems, and only 2 out of 12 roofs needed to be done.
Nice.
And I was like, we can do something with this.
Yeah.
So we're looking at purchase price. So they wanted 83K a unit, and units were trading for 100 to 110K a door.
There you go.
So I was like, we got this on lock.
Yeah.
Long story short, we ended up syndicating it. We ended up getting the property for 5.5 million, and the appraisal came in at 6.5 million.
Excellent. Nice. Like walking into equity like that. Hell yeah.
Yeah. So that was killer. We put together a formal PowerPoint presentation. We held webinars. We recorded them. We put them out to our entire network. We did a good job on the capital raise side. And we got to a point in which, I think we kind of tapped out our ability to raise. And what we ended up doing was we ended up bringing in a person in our network who was my partner's immediate mentor, who had a lot more experience than us.
Yeah.
And he ended up bringing in the remainder of which was 40% of the money. And then he came into the deal, and I think that he ended up getting 50% of the GP portion for bringing 40% of the money, and then we collaboratively operate and manage the whole thing. So, yeah. But the big thing for me at that point was I did not care a lick about what my rake was on that deal. What I cared about was executing a 69 unit syndication and what that meant for putting me on the map.
Exactly.
We executed, we were in a situation where between me and my partner, we were in like the 30 to 35 unit range. And all of a sudden you go from 35 units to over 100 units and you execute a syndication, you're a GP. Like, you're on the map, bro. So
at conversations changed.
That totally changed the narrative. And you start hitting up lenders and you start hitting up meetups and you're like shaking people's hands. You're like, hi, by the way, I've gone from 0 to 100 units in the last year and a half. And they're like, okay.
Yeah, 100%, 100%. And that's the right mindset as well. And what I love about that deal, you guys go and walk it and you immediately have the mindset of, this is a deal, so let's do the deal.
I think the other thing too is what he said about kind of getting tugged into going to see the deal, right? We've all had to do that with each other and some other folks, right? And honestly, when you have a very creative and growth mindset, when you get eyes on it, you kind of start to see the potential, right? And you start to believe in what you think it could be, right?
100%.
And what I will say is that in my partnership, I'm the action taker, I'm the visionary, and I'm the person who's like, we can do this. And my partner's like, you're out of your mind.
We have both of those
too. We can do this. So we ended up getting the deal under contract. We ended up raising, a significant portion of money. I'm telling you, man, my wife, I was going to 3 to 4 meetups a week, standing on top of bars, being like, I got this deal that we bought for 5.5, it appraised at 6.5. We're raising money for the deal. Let's talk about it. If you're interested, I'll sit down, I'll chat with you. We've already raised this amount of money. Like I was, I was going in. So
100%.
That's what it takes.
That's what it takes. It's just lead generation. We were talking about this at dinner last night. It's so funny so Nick and I run real estate sales teams. And so, a lot of our day to day is working and coaching with our sales agents, and they pound the phones all day. They find buyers and sellers to do business with. And, there are times when I'm literally doing almost like, if you didn't know any business from the other, you'd walk in and you think we were all doing the same thing. I'm having the same conversations. I'm just talking to potential investors trying to raise money for our deals. And if you can do that, you can sell real estate and you can have those conversations. You can parlay that with the right knowledge into building a syndication business. It's really the same thing. It's picking up the phone and having valuable conversations with people.
Exactly. You talk to enough people, somebody's going to be interested, as long as your messaging is crisp, right?
Feels good.
Exactly. Exactly.
100%.
So Zach, incredible journey so far. What's next for you, and what's next for Freedom as you guys stabilize that asset and start thinking about the future?
It really feels like sky's the limit at this point, because we really tightened our lead gen operation over the last 6 months. We really hunkered down and put together a formidable CRM system that we now leverage for all of our deals. It's made our ability to do more deals in an expedited period of time far more, possible. We recently have had a multitude of conversations with people, between my partner being on the Bigger Pockets podcast a couple times,
Nice.
and between attending local meetups and sharing our stories with local investors, as well as some of the bigger fish in our market starting to see what we're doing and at what pace we're doing. I think we have bigger fish that want to pair up with us and do bigger deals with us. I think that we have the investor backing has grown. We have a lot of referrals. We're executing a lot of refinances on a lot of the deals that we have done in the past to be able to redeploy capital. And then we also have some new connections that were brought to us that, our money at this point is not really a constraint. And I think that's why we looked at it and said our biggest constraint at this point is deal flow. And we devoted a real significant portion of time to implementing strategies to improve that. And I think at this point we have hit a really good stride. In the first 2 months of the year, we got 6 deals under contract, a total of like 45 units. We are bringing in a full-time admin in-house. We are bringing in a project manager that will oversee our full-time admin, our 2 VAs, and then also our boots-on-ground property management assistant.
Nice.
They will all report to our project manager. Our project manager is going to start to get cut in on our deals, and our admin is going to be thoroughly involved in the administrative side of acquisitions. And we are going to stay in our lane, which is deal analysis and crushing it on the operations side, because effectively my partner and I, our biggest strength is going from closing a deal to stabilization and then handing the stabilized asset off to our PM assistant. So we're gonna continue to operate in the spaces where we bring value to the team, and then we brought in people to house, and take on responsibilities that burden us from continuing to scale and doing more deals. And I think with the access to capital that we have, I think we have a lot of room to, build on that. And I think our goal this year is to try to acquire, an additional 100 to 120 units over the course of the year.
Wow. Nice. That's awesome, man. Good for you. So we got to start to wrap up here in a second, but before we do that, one question for you, right? Going back to the beginning of the show, you mentioned you were in the gym business, right? What you just walked through, though, your strategic plan, right? Bringing on a project manager, how you're going to set up your internal org chart, who does what, how that all kind of feeds the machine. Where did that level of business acumen come from? And how did you take such a crisp and practical approach to setting yourselves up for scale?
What I will say is that my partner is a project manager. He manages grant applications for MIT and Harvard, and effectively he is a huge systems person. I'm much more of a fly-by-night kind of person, so he kind of throws some guardrails up, and then he jokes around and says, like, I'm like the junkyard dog on the chain leash, and then effectively when there's an opportunity that's present, he effectively just takes me off the leash and lets me run, but he puts the guardrails up beforehand. And so what I would say is, like, I'm not going to pretend to act like I'm this like buttoned up systems guy by nature. But what I will say is that, like, I'm a relentless action taker, and I'm willing to operate at an uncomfortable speed that makes that most other people aren't willing to operate in. I think that he does a great job of setting up the systems, and that's why we complement each other well. But what I will say is that in addition to that, I think that I bring those ideas to the table because I'm the visionary. And then I think that he then talks through and then creates the strategy and the systems. And the reason why I'm able to visualize the things that we need is because my background is actually, I went to undergrad for business and finance. So I very much so understand like the layout and structure of business. I just don't understand how to put the procedural items together and then implement them with putting the right person in the right seat. I think that what I will say as well is that I think one of my number one strong suits is being able to evaluate people during the interview process. So I think that we have done a really good job. It's no surprise that, like, I selected my partner, and my partner is the perfect fit for me personally. we've selected a project manager and we'll see how that shakes out. I'm bringing my administrator from my gym business over to my real estate business because they are that valuable to me in terms of how I view that person and what their skill set is. And then our PM assistant is an absolute workhorse dog. And so I think that, again, it comes down to you got to find the right people in the right seat, and being able to interview and identify those people is one of the most valuable things to your business as a whole.
I love that. We were just talking last night about the importance of who, not how, right? Going back to the old Dan Sullivan book. And
Yep.
It sounds like you're really good at figuring out the right who's to surround yourself with, right?
Yep.
Finding complementary skill sets, identifying your strengths and theirs and how they kind of come together for the company's benefit. And I love kind of the Jim Collins, get the right people on the bus, the wrong people off the bus, and then put everybody in the right seats. Like, just fantastic kind of business principles there.
100%,
Awesome.
100%, man. Well, Zach, we super appreciate you taking the time, brother. We got to wrap it up, but I think that your story is so inspiring because it's literally, it is everything you hear about and read about in every book. It's just massive action behind it, right? Like you admit,
Absolutely.
there are very, very, very few secrets to this business. It's just getting a playbook and go out and executing every single day. And I think you've done a phenomenal job of that, man.
Where can people find you, Zach?
Absolutely. I would say reach out to me on Instagram. My Instagram handle is at the 1099 mindset.
The 1099 mindset.
That's the way you want to reach out to me. So at the 1099 mindset, you can join our newsletter, see the deals that we're doing. We'll give you investor tips. We'll give you some of the stuff that we implement to help make our deals pencil. And at times we will also wholesale off deals that we are interested in liquidating that we don't want to take on. And then the last piece is if you have questions or you're interested in connecting with me or asking me questions about my investing strategy or something I mentioned on the podcast, feel free to reach out. I just started running a mentorship program in which I run 2 classes a week for people who are serious action takers.
Nice. Love that, brother. All right. So reach out to Zach at the 1099 mindset on all social media platforms, Instagram especially. And make sure you check out deepbluere.com, the home of Deep Blue Capital. TORE studios.com, the home of Tour Studios. Zach, again, thank you, brother. We'll have to do it again soon. I want to hear how the assets that you're currently working on work out and see what's next for you on your journey.
We'll have you back on next year after you grow by another 120 units, brother.
There you go.
Yeah, absolutely. I'd love to be back on. I'd always love to reconnect with you guys. This was a pleasure. And, we got one in the pipeline right now where we might be able to walk away with close to $500,000. So I'd love to come back on and talk about that at some point once we execute and, put pedal to the metal. And, I appreciate you guys for giving me this opportunity.
Absolutely.
Yeah.
Likewise, brother. We'll talk soon, man. Thanks again.
Thanks, Zach.